Go for it.
Everyone, you should have received a email invitation from me this afternoon, or this morning, I guess you would have gotten it, for your, whatchamacallit, business plan presentation. 2 of you received a different email from me saying, please let me know. If you do not let me know by the end of today, I will just be sending you a time that works for Dave and I for your business plan presentation. So you know who you are. Please sign up by the end of today's session so that we can get those all scheduled, because unfortunately we have to fit some other meetings in there as well. Other than that, I will be quiet. Enjoy your day talking about not cash flow.
Are you sticking around with us today, Kelsey?
I'll be with you, but I'm doing other work on the side, so just holler for me, okay?
Will do. Awesome. Okay. All right, guys. So welcome to day 29. This is round 2 of planning for a profitable business. Let me just share my screen with everybody here. One second. Okay, so I hope I hope we're excited. It's going to be another kind of drier day today, but you know, I'll do my best to kind of make it not so boring. So we're going to be going through a little bit of stuff that we went over yesterday, but we're going to be going into a lot more examples and kind of seeing it in real time, I guess, to kind of help solidify some of this learning. So today we're going to first review kind of the components of profitability that we went over yesterday. We're going to introduce and practice kind of the 3 sales projection approaches, which is the comparative sales approach, average sales approach, and the bottom-up approach. Then we'll practice adjusting expenses on an income statement to improve profitability and discuss the pros and cons of these decisions. Then we'll introduce the financial Excel template that you can use. And I recommend you do because it's a pretty awesome tool. But if you're already using QuickBooks or something else, then you're probably going to stick with using that. And that's going to show you how it can help you develop accurate, timely financial statements. And then with the aid of that template, you're going to work through action step 8.1, which is about projecting sales and analyzing your profitability. And then we'll get into some of the details of action step 8.2, which is doing the projections for your 3-year income statement. All right. Before we jump in, is there any questions from you guys? No? A-okay? Good to forge ahead? Awesome. Okay. So before we truly get into it, we're going to do a little bit of an exercise here. And I just kind of want to call attention to that, you know, actually, you know what? We'll talk about that after. I want you all to look around your room or go into the house, wherever you are. I want you to grab a piece of paper and a pen or a pencil right now. 2 minutes, go. And give me a thumbs up or just tell me once you're ready. Brooke, Steve, Cecilia, Josh, you guys are good? Ryan, Tracy, Ashley, Maisie, you good? Awesome. Brittany, Abby? Brittany, good. Abby, I know that sometimes she has trouble with the computer, so we'll wait another 20 seconds or so. Awesome, she's ready. Great. Okay, so what you're gonna do is you are going to draw a line down the middle of that page, okay? Quickly draw a line, straight down. Oh, someone in the chat here. Brittany, you having any internet issues? Oh, shoot. I'm sorry. I'm right there with you. I've had some serious issues. So also, before we jump to this, if you were looking for the videos from the last couple of days, my internet crashed the last 2 days in a row at 5:30, basically, till well into the middle of the night. I don't know why, but they are up now, finally. So they're there. But Brittany, this recording will be there too for you if you're having trouble. And Cecilia, yeah, you as well. I don't know. It's a bad internet week for something. Okay. So you've drawn your line down the middle of the page. I want you to take 2 minutes and write down what you fear or dislike about financial concepts on the left side of the page. Okay, 2 minutes. Go. Okay, that's 2 minutes. Now we're gonna do 2 more minutes, and and you're gonna write what you stand to gain by understanding financial concepts, getting a better handle on this stuff on the right-hand column. Okay, so 2 more minutes. Go for it. Okay, I hope that was enough time for you guys. Let's do a little sharing. I'm curious to hear, is there any brave volunteer that wants to share some of the things they fear about financial concepts? Ashley, you got your thumb up?
Yeah. So the first thing is like, what if I'm not accurate in my numbers? I have a huge like fear of debt and owing people money. So I think that's kind of when like the whole tax thing comes into play too. Like if someone else who's a professional can handle this, maybe the less chance of me incurring debt. That's a big one.
Awesome. And what did you write as what you stand to gain?
That was an easier column to do. I think it'll be easier to scale the business when it's time, when you know where the money's going. Because scaling upwards doesn't just mean making more sales, right? So also, if something's not going right, if you have a full understanding of the numbers, it'll be easier to make those changes.
Definitely.
And
Awesome.
just having like complete control over the company as well.
I wrote control as well. And I wrote in fear of inaccurate projections. So thank you, Ashley, for sharing. Very brave of you. Who else is going to share with us? Tracy, go for it.
So I had a very similar one to Ashley with regards to like debt. So I made like a huge list with just like some general. So like I have balancing the books, like debt, overspending, overhead expenses, which impacts the profitability of the company, budgeting, both personal and business, taxes, organizational concepts, owing too much for taxes and I can't pay it back. So like that whole like balancing the books, business accounts, like fees and with banking. I really dislike that idea and concept, but I know it's needed. And then the gains from understanding, my first one, and it really like rings true for like the rest of them, is financial freedom. Like having that feeling of like not having to worry so much about the finances because I've got this, like that whole control thing. That Ashley and you were talking about. And then like having a stable future for like me and the boys, and how like oh my goodness, I can't remember. When we had the mindful Marley, she talked about like the ripple effect of like money's easy to come by, but that's only if you believe that kind of thing. And having the boys have that as they grow up would be really nice.
Awesome. That's a big list. Thank you, Tracy. I love it. Awesome. Well, thank you, everybody, for sharing. I really do appreciate that. So what I want to just kind of call attention to here is that for each of you, like we had some overlap there. Some of the things that Tracy said, I had on my list. I was checking kind of off some of the ones that you nailed, and same with Ashley. And I'm sure others here had some similarities as well, both in the fear and in kind of the, the gains kind of column. But this just shows us that financial success for all of us, well, it definitely means different things to different people, right? But your business's financial success, however, is always, always, always measured in its ability to cover startup costs, to achieve profitability, and to maintain cash flow. And that's mainly what we're going over today and next week. So designing your business to meet these criteria, it's definitely a critical step in reaching whatever your own personal financial goals are that you're trying to achieve with this business. And understanding the financial concepts this is just an ongoing process. So this, for some of you, is just, the baby steps, the very beginning. No doubt you probably already have a deeper understanding of your business's financial situation, more now than you did, 10 weeks ago. So this is going to continue long after Leap. And, I hope that, these fears that you've written down here over time will disappear. So in the spirit of that, I want you to take those fears, take that page, rip it out of your book right now. I want you to rip off that left-hand column. I want you to crumple up into a ball. I want you to throw those fears away. Okay? So we want to concentrate on what you stand to gain by understanding those financial concepts. So keep that right hand of your paper, keep that on your desk, keep that with you. That should be the reason why when it's tough, when it's hard to understand these things, when you're pissed because something's not making sense in your budget, look back at that list, because that's what you stand to gain by either getting help, by asking somebody, or figuring it out. Okay. Message from Kelsey. Thanks, Kelsey. So We're going to retouch again on some profitability. And I know that we talked about that a little bit yesterday, but I want to reintroduce and kind of reinforce financial concepts that were presented in module 3 back in week 3 to assist you in developing, more profitability. So you began the journey when you wrote, your business concept in that first week. But at this point, we're moving towards our destination, which is the development of that, feasible business concept into a full-fledged business plan with hopefully, 1 to 3 year projections in that business plan. So this module and the module next week are about providing you with some financial tools to use along the way. So these tools will be used in setting up your business and will continue to be important as you grow your venture. So what we're going to use today, the financial template, the sales projection tools, you're going to use these probably over and over and over again. Okay. So the financial information that you've generated to this point, startup costs, which were estimates for some of you, some are actual, personal financial goals, and everything you've written on that financial facts worksheet. All those things now will be entered into the financial template in this module and module 9 to assess your profitability. So you can only consistently reach your financial goals, through business profits. So as a general practice, you should project profits for 3 years. In order to get such a long-term projection, we estimate sales or revenues and expenses for your first 3 years of operations. Then we use these numbers to construct a 3-year income statement. So the first step towards this 3-year income statement is to finalize your sales and your expense estimates, which you've probably already been working on. So this step, it can be very involved with estimating your sales, as it includes researching and assembling information, assessing the information for its accuracy, selecting the appropriate estimates for kind of all areas of your business's operations. But, you've already begun this process. We've already been doing this throughout other modules, and the financial facts worksheet is where you've prepared, hopefully, what will help you finalize these estimates. So recognizing the components of profitability. So a little bit of review from yesterday. So the primary financial goal of your business, as we said, I'm going to say it again, should be profitability. Otherwise, maybe you got a hobby, or maybe you're more of a social enterprise, nonprofit model, totally fine. But when we're doing these numbers, if money's got to go out, money's got to come in, you have to be self-sustaining. So only through continued profits will you have enough cash to pay yourself, to pay others, and to hopefully reinvest in the business. So profit is measured by the amount of net income you have left over after you have deducted the expenses of your business from its revenues or sales. So the net income equation that we learned in module 3 here, right? We have sales minus our cost of producing, our cost of goods sold, our cost of sales. That gives us our gross margin. We talked a bit about this yesterday as well. Then from our gross margin, we subtract our operating expenses to give us our net income. So the only way to increase profitability is to make a change within one of the components that make up the net income equation. Okay, shown here. So you have to appropriately change one or more of the 3 components of profitability. So change to sales, a change to your cost of goods sold, or a change to your operating expenses. For example, lowering operating expenses will typically increase net income, right? Increasing sales, for example, may also increase net income, but solutions are not always as simple as just increasing sales, right? You might improve profitability in the short term by purchasing cheaper materials from a different vendor or supplier, but later on, however, you may end up having to do returns or rework. You may end up with lost sales that could be caused by just a shitty vendor who was cheaper, right? Or slow delivery from a supplier that you switch to. So that might have the reverse effect. It might actually lower sales and also reduce profit. But either way, regardless of your tactic, you will always observe financial responses to your business decisions if you watch for them. So each of the components of profitability, revenue, cost of goods sold, gross margin, and operating expenses should be carefully researched, carefully projected, and carefully assessed. So as you develop your financial plan, you got to pay particular attention to the accuracy of your sales projections, as well as the cost of goods sold of sales, okay? So these two components and net income, they play a huge role in the pursuit of profit. And you'll get better at understanding these over time, the more you play with this. So how accurately, you estimate sales and these costs of goods sold and your operating expenses, that basically means the difference between meeting or missing whatever you set out as your profitability goals for the end of the year. So the profit of your business, it's not like a final score over which, you cannot control. Profitability can be managed, and it should be managed through thoughtful changes in the components that go into it, which is what we see here, okay? So one more example, cost of goods sold, that can be reduced if efforts are made to buy in bigger quantities, right? You get a volume discount. You can find a less expensive vendor or negotiate better vendor deals. But if you have accurate financial projections and a very clear business concept, your only option sometimes for adjustment for some of you may be just to increase sales. But make sure you carefully consider how likely that is, how difficult that might be, because it's not just as easy as saying, I'm going to increase sales by X%, okay? So we're going to jump into a bit around identifying and projecting sales. So this is something I've been asked a lot about from this cohort, So I thought we could go over some examples today that I found in the manual. So it would be nice if you could look, into a crystal ball and see what the future holds when you project sales for your business. But since you can't do that, projecting sales requires looking at a variety of perspectives and determining how each might impact the sales and profitability of your company. Because of the importance and complexity of projecting the very critical components of profitability, many new entrepreneurs, use different approaches. And we learned about those yesterday. So we learned about the 3 common ways to project sales: the comparative sales approach, the average sales approach, and the bottom-up approach. Estimating accurate sales should always involve several methods. So today we're going to go through all 3. And when you're doing your projections for your business, you should use all 3 as well, if not other methods that you can learn about on your own time as well. So I know we briefly went over these yesterday, but we're going to deep dive each method with some examples today. These exercises are hopefully going to get you a bit more comfortable with projecting your own sales, and also help you to understand the relationship between setting prices and the effect on sales. I just need to adjust my screen here. So activity 8A. So this is pulled right from your manual, guys, and you may have already looked at this. If not, we're going to go through it together here today. It's on page 318 of the manual. So the one I picked for us today is the wood brain puzzles. So they make wooden puzzles and toys like Jenga, like big Jenga, small Jenga, things kind of like of that nature, or those little wooden puzzles. I'm sure I've bought a few of those or gotten them as gifts over the years and can never freaking solve them. But anyways, wood brain puzzles, who are they? What are they about? Well, they wholesale wooden puzzles and toys through upscale retail and mail order toy resellers. Their industry averages indicate, so based on their research, they've learned that a company with their production capacity could reach sales in excess of $185,000 annually, okay? The first year of sales would probably be at least 25% lower than that, because this is an average, across all of their competitors. So they're projecting that the first year of sales is going to be 25% lower than that. The part-time sales manager who has the job of, making all these sales is expected to sell 12 sets of each product. They come in, a set includes, I think, 4. So this includes small puzzles, large puzzles, and toys. Expected to sell 12 sets of this product quarterly to each of the 35 resellers that they're working with. Although she thinks that only 75% of the resellers will purchase the toys. That's an important point. Third quarter sales should be 50% higher than the others. That's most likely because of holiday sales, maybe Black Friday and things of that nature. And the cost of production is similar to the competition, so which we'll see on the next slide. So And then the business itself, so Woodbrain is projected to operate at a cost of $3,000 per month, so operating costs are $3,000 a month. And in addition, the owner of Woodbrain is hoping to take a salary of $50,000 in their first year and wants to achieve $30,000 in addition to that in profits to use to reinvest in the company for future growth. Now, when we look at the competition, so this is the research that they made available to us. So this is what they were able to find out about the competitors, and this is what they're basing their pricing on as well. So they sell the small puzzles for 20 bucks a set, large puzzles for 30, toys at 40, and we'll come back to this after, okay? So doing our sales projections. So when you're doing this too, first one you're usually going to start with is the comparative sales approach. And if you remember, this uses research that you have done on your competitors and your industry. You know, from your research, you should be able to produce relatively accurate estimates of sales based on your competitors' annual sales and the amount of sales expected in your industry. But keep in mind that if your competitors have been in business for a while, your first year sales are probably going to be significantly less. So be ready to make adjustments based on the reality of whatever situation you're in. So after you've analyzed all your competitor and industry data that you can find, you'll want to identify a range of projected sales estimates for your business, okay? So you should research as many competitors and industry sources as possible. So the more competitor and more industry data you can include in your calculation, the more accurate you can expect your projections to be, right? Pretty obvious. When your sales estimates using the comparative sales approach seem reasonable, you're ready to look at the next perspective, which is the average sales approach, which we'll go into next. But first, let's break this down. So what does that look like for Woodbrain using the using the comparative sales projection approach? So on the sheet, if you're going to go do this yourself, this is the page they give us to fill in for the comparative sales approach. So with this approach, we're looking for the info on the industry and on our competitors. So industry research, competitor research here, okay? In the industry as a whole, we're looking for a range of sales in the region or a range of sales of similar sized companies, okay? We must also consider, since this is our first year in business, any possible first year reductions or boosts in sales that can occur, okay? Then if we're lucky, we look for specific competitor info if you're lucky enough to be able to find it. Some of you won't be able to find any information on that, okay? But do your research, give it a really solid effort, okay? So what information is available to us, the comparative approach in this example? So based on the research that Woodbrain has done, we've learned that the industry averages for sales is as high as $185,000. However, first year sales would be, or probably be, at least 25% lower than that. Okay, so that's important to note. We also have learned that the cost of production, similar to the competition, whose products are not as durable, colorful, or creative, that doesn't really matter here. So here we see that the competitors are selling what I said before. So 20 for a small puzzle, 30 for a large, and 40 for a toy, okay? And the costs and retails of those items. So what do? We take that information, we plug it in here. So $185,000 is the high end, right? That's the high end of what in our industry, based on our research, a similar size company would be making annually. But we have to less that reduction. So it's going to be Woodbrain's first year in business. So we have to take into consideration that possible 25% reduction, which equals out to about $46,250. So based on this approach, the industry and competitors' annual sales that we've learned here, we see total yearly sales projection of $138,000. $138,750. So this is kind of our industry standard for our first year sales projections based on our first year in business. Okay, pretty easy stuff here, not hard. All right, so let's jump into the average sales projections approach. So for this one, we're going to need a few more things, okay, to project the sales using this method. So the first thing we need to do is we need to count the number of sales transactions that you expect over a specific period of time. So that's the time period is what you decide, or whatever is common in your industry with your competitors. So it could be weekly, monthly, quarterly, yearly. Step 2 is then to calculate the price of an average sale for your business. And then lastly, we do the projections. Can't forget though, that after you've calculated sales for 3 years, you'll want to check your projections again for reasonableness. So if you get a ridiculous number, whether it's high or really low, maybe go back and take a look and analyze what you've got there, because there maybe, if your gut's telling you something's off, it might be off. So using our example again with Woodbrain, we can now project sales using the average sales approach. So step 1, we count the number of sales transactions you expect Woodbrain puzzles to have in the first year. Based on what we know, or our research that we've done, they expect to sell 12 sets of each product, small puzzles, large puzzles, and toys, quarterly to each of their 35 resellers identified, okay? But they think that only 75%, remember that's important, 75% of the resellers are going to purchase toys, okay? Step 2, now we know that, we then calculate the price of an average sale for the business. So cost of production is similar to the competition, and we're going to assume that the cost of the units will be similar also. So based on what we know about Woodbrain's competition, we have the price of an average sale for small puzzles, large puzzles, and toys as $20, $30, and $40 per set, correct? So this obviously is a pretty straightforward calculation. They've just given us one set of numbers here. If you're looking at competition, and it's going to vary wildly, you're going to have to average between the different products, or if there's only one product, maybe it's a little bit easier, okay? But luckily in this example, for the sake of time, I'm just going to go with, this is going to be our average because we're only given what we have here, okay? So now the last step is to take what we know now and project the total sales for each product or service, which we then use to get our total average yearly sales, which is down here. And this is the form, the sheet that you can use for this as well. You're given a blank one of these as well in the manual. So we know that the part-time sales manager, as we said, he's got to sell, or I think she has to sell 12 sets of each product quarterly to each of the 35 resellers identified. And we know that third quarter sales should be 50% higher than the other quarters. 1 second, I need to make this bigger so I can actually see. So this goes into our assumptions. This third quarter sales are 50% higher than the other quarters. So you'll see this here on the assumptions. Note the sales variations. So when you're doing this in your spreadsheets, you're going to want to put in this assumption as well, as long as it'll fit onto one line. You should be able to put that in. And actually in the financial template you're going to get today, you'll see where you can kind of put these things in as well. Okay. So where am I here? So, okay, let's go back. So number of products or services sold. So 12 sets to 35 customers and that's per quarter, right? So that's 420 for quarter 1, 420 for quarter 2. We've got that increase in sales in the third quarter, 50% higher, brings us to 630. And then for quarter 3, again, 420 units. Okay. So total sales for quarter 1, quarter 2, quarter 3, quarter 4 are listed here, which gives product 1's total yearly sales at $37,800. So for large puzzles, it's very similar, almost identical, just different set of value or different price for those units. So that gives, and it's the exact same assumption here that quarter 3 is going to be 50% higher. So that product 2, the large puzzles, total yearly sales of $56,700. For toys, however, there's an additional assumption, is that only 75% of the resellers are going to actually purchase the toys. So we have to take our original 35 vendors or 35 customers and reduce that by 25%. So instead, we're going to be selling 12 sets to only 26 customers. So that reduces our total number of units sold. And we have our price here set for the toys. That gives us our individual sales per product per quarter for a total yearly sales of $56,160. Now we don't have a fourth product, so we head down here, we add all of our subtotals. So total yearly sales using the average sales approach is $150,660. So definitely higher than our comparative approach right now, okay? So now we're gonna head into the bottom up sales approach. So this approach is definitely much more mathematical than it is about, creating visionary projections. And in order to prepare this projection, you have to do a couple things. The first thing you got to do is you got to estimate your annual cost of goods sold, and then also all of the expenses that you expect in your business over that year. These total costs plus the amount of desired profit will end up representing your projected annual yearly sales, okay? The goal, of course, is to cover costs in your business and also hopefully produce a profit. Since covering costs and generating profits is obviously essential, this approach is definitely a good way to check the reasonableness of the other two sales projection methods that we just went through. So if your bottom-up approach leaves you with a projected sales number much higher than the other two approaches, then you may need to consider the ability of the business to achieve that level of sales while maintaining profitability. So it might be worth taking a look if you do find that the bottom-up approach leads to a much higher number, okay? So as we said, this is a much more mathematical approach. So we look at many more variables in the bottom-up approach. So first thing we look at, what's your estimated monthly operating expenses? Actually, I can use this side of the screen here. So, and that's excluding any owner's salary. So we take whatever our estimated operating expenses are, we plug it in here, and then we times that by 12 to give our total. And then we want to know how much salary per year do you and any other owners in your business want to make. Here we, it says here your salary will be increased by 10% for employer payroll taxes. However, I want to mention here, this is, I think it's mentioned later, but actually let me just double check. No, it's not. Okay. So what this actually is your self-employed CPP contribution rate. So as being self-employed, as of, I think, 2021, it's 10.9%, not 10%. So when you're doing this, 10.9%. So that's something to make note of. So you enter that in, add your extra 10.9%, that gives you your calculation here. And then you need to know how much pre-tax profit that you want to make in dollars. What is your sales price per unit? What is your cost of product or service per unit? As well as what is your gross margin. And then this is your kind of bottom-up sales projections that use the number of units or number of hours sold times your selling price, which can't actually be calculated until you have this number here, which is the number of units that you must sell to cover your costs of sales, operating expenses, and profit expectations. So don't worry, we're going to go through this. Might not make sense yet, but it will in a moment. So using our example of wood brain puzzles, now we can project sales using the bottom-up sales approach because we have all the information we need. So step one, estimate your annual cost of goods sold and all of the expenses you expect in your business. Then we add the amount of desired profit, which then will represent our projected annual sales. So what does that look like? So we know that the estimated monthly operating expenses of Woodbrain was $3,000 over 12 months. That comes out to $30,000 per year. We know that this individual wants a salary this year of $50,000 plus our employer payroll brings it to $55,000. We know that they expect an additional they are hoping for an additional $30,000 in profits to reinvest in the business. You know, our average sales price per unit between the small puzzles, the large puzzles, and the toys averages out to $30 per unit. And we know what the cost of those units are. It averages out to about $750. And then our gross margin based on that comes out to $22.50. And you're wondering, oh, well, how did all this get calculated? Well, bonus for you is you won't actually have to do any of this. I'm going to give you a sheet that will calculate it for you if you're really bad at math. And that brings our bottom-up sales projection after looking at this is our number of units that we have to sell to cover all of our costs, to cover operating expenses, to get me this profit, to get me this salary. We're going to sell 5,378 units, which gives us a total yearly sales that we need to make of $161,340. Okay. So what can we learn from all this? Well, first off, thing of note, this process of estimating sales, it's not guaranteed to produce an infallible sales projection. Okay. As expected, errors will happen. These are just projections, they're estimates, but they're better than nothing. And as expected, these three approaches, they've yielded us three different amounts. But you as the entrepreneur, you've got to evaluate these amounts to determine what's my most likely outcome. It's interesting to note here, though, that both the average sale approach and the bottom-up approach yielded a higher sales estimate than our industry average or industry estimate for a business's first year with the same production capacity as the competitors. So what does this indicate here when we see that? So this would indicate that unless Woodbrain has a more efficient production process, then they may not be able to produce as many items as they think they can sell. So these may be a bit overinflated and may need to be adjusted, okay? Since the bottom-up approach resulted in the highest sales estimate, its components should be reviewed very carefully, as we stated earlier. So this approach is the only one that takes into consideration the salaries as well as the desired profits of the owner. So these amounts then may have contributed to the size of this estimate. So we need to make some adjustments and see what happens there. Now, since raising wholesale prices will ultimately affect the retail price that the end user must pay, Woodbrain Puzzles has to carefully consider the consequence now of raising prices because they're already kind of at the threshold with the industry. So if the puzzles and toys are currently priced at the high end of a market or the market's tolerance, then there may not be room to raise prices. So increasing sales through a change in pricing may not be the approach that Woodbrain can take. And it appears from this first attempt at projecting sales that additional information from competitors, I think, based on what we saw, the loose bit of information when we did our comparative sales approach, we might need a little bit more to provide additional insight into kind of the comparative sales approach, which will help us validate the sales and production figures used in these other two estimates. As we saw, we were only looking at some really limited numbers. So hopefully you can gather a bit more information here when you're doing this so that you'll be able to make a more accurate comparison than we did in this example. Okay. So using all three approaches, what can we learn from this? Using all three approaches to predict sales can increase your confidence, but also the reliability of your sales goals. You can look at these sales figures that you projected using each approach, and you got to ask yourself, which one relies on the most accurate information, which one seems the most reasonable, and which one seems the most actually attainable, especially in your first year. In all likelihood, your actual sales will probably rest somewhere in the middle of those three estimates, and that's okay. Projecting sales near the low end also is more conservative and will probably be more acceptable when you're talking with a lender. And projecting sales at the high end, certainly risky because the amount will be difficult, if not completely unlikely for you to achieve. It may, however, provide a more motivating goal if that's what you want. Just make sure to select the sales figure that seems more realistic and be prepared to support your decision through detailed sales assumptions. Okay, guys? Now, when working in the financial template, you must condense. This is something to note. When you're working in the financial template, you got to condense any assumptions to fit one line. But if you've got big assumptions, any detailed information, you can include that in the appendices. And you can also, I'm hoping you can see my screen, which I think you can. Whoops. I can't see you guys. Someone give me a thumbs up. Can you see me? I've switched the screen. We good? Can see it? Okay.
Yes.
Cool. So if you've got any crazier assumptions, big assumptions that you're making in front of your spreadsheets that you'll include in your financial section of your financial plan section of your business plan, there we go. You can always include that as kind of a preface, any large assumptions, if you've run out of room in your spreadsheet. Okay. Whew. All right, I need a drink of water before we move forward. 1 second, I switch back. There we go. Okay, so this is a little gift for you. All those calculations we just went through, well, you can now make them happen automatically. Isn't that amazing? So there is on FOL, whether it's in the business plan resources or in today's module resources, you'll find this little nifty file. It's called Sales Projection Tool. It actually has everything we have here, the bottom-up approach and the average sales approach. There's also a third one here, the top-down. It's a little bit different. You can try this one out for yourself as well, but I definitely want you to include, you don't have to, but it's good to include a comparative approach because that shows that you've done a lot of your industry research. But all of the calculations are made here for you. So all you got to do is plug in those numbers. As you can see, I've done them for Woodbrain already. All the numbers are exactly the same. That's how we got what you saw on these slides. So you just plug them in, the calculations happen all on their own. Now the file is protected. So if you want to make adjustments, you notice that it's weekly, monthly, yearly here, but Woodbrain was doing theirs quarterly. So I had to add up all the number of products sold throughout the entire year with all quarters, but you can make adjustments here if you want to the cells. You'll just have to unprotect the sheet and then you'll be able to go in and make the modifications if you want. Okay, so that's a little gift for you. Make it a little bit easier when you're going through and doing your sales projections. Okay. Now we're going to practice adjusting expenses on an income statement to improve profitability. And then we're going to discuss a little bit of the pros and cons of these decisions. What is happening? There we go. So basically what we're going to do here is we're going to observe the consequences of making adjustments to revenues and expenses, which are obviously, as we said earlier, those are two factors that can affect your profitability. Because the primary goal of financial planning, obviously, as I said many times, is profitability. So you have to evaluate profitability by looking at revenue and sales, costs of goods sold, and operating expenses. And profitability can be improved by appropriately adjusting these amounts, right? Now, it can be difficult to make these adjustments without causing another area of the business to be affected. It's like a scale, right? For example, when prices are raised to increase profitability, the consequences might include losing customers, which can actually decrease your profitability, right? So in this activity, which is on page 232 in your manual, we're going to make some adjustments to increase profitability for a full service car wash. Okay. So step one in this, and I definitely encourage you guys to go through this in your own time too, but we'll walk through it together and make it a little bit easier for you. So step one, okay, you're going to look at this income statement for full service car wash, and you're going to brainstorm a list of items that could be modified to increase profitability for this business. Now, we're actually going to do this together. I'm going to give you some time to do it, and you're going to try to get creative and think of areas other than pricing and sales that could increase profitability. Then step two, you're going to take a good look at this list, and for each item, you're going to identify the possible consequences from making that adjustment, okay? So I want you to bust out your manual, or just get out your piece of paper if you want. It's easier. You're going to need, I can leave the income statement up here in a sec, but if you've got the manual available, bust it out, and I'm going to give you 10 minutes, and we're going to go into groups of 3. Kelsey, are you there with me? Can you make some breakout rooms, groups of 3 for me? So you're going to take 10 minutes in groups of 3. You're going to just read through the scenario and make whatever adjustments you think can be made to increase profitability, and then you're going to take a crack at just predicting some of the consequences. Please make as many assumptions that you want. It's totally fine. We're just having fun here, but make assumptions when necessary. The purpose of this activity is to just get you practicing analyzing an income statement to identify areas to improve profitability. Okay. And then when you come back, we'll have a couple of you take turns kind of reporting one adjustment and its consequence. All righty. Cool beans. Kelsey, are we ready?
Go to your rooms.
All right. See you guys in a few minutes. If you have questions, come back. And Abby's stuck with us.
That's okay. We like you, Abby.
It's okay. But I feel like the other group members are going to want her there.
Well, I would. I'm not upset she's here with us.
Oh, shoot. I forgot that they're going to need this. Well, they should have the manual if they haven't downloaded it.
You're still recording, by the way.
Okay, one sec. Let's pause. Recording is on. Welcome back. Shoot me a thumbs up or turn on your camera if you're here, please. Steve, Ashley, Brittany, Brooke, thank you. Rachel. Abby, thank you.
Dave, before today is up, can you give me like 3 minutes to talk to everyone about baking?
Yes, definitely.
Perfect.
Kelsey, was there not an announcement that Jenny was needing to make? Kelsey might not be here. Just realizing Jenny's not here today. Okay, Maisie, are you there? Cecilia? Awesome. Okay, well, we got to stay on, so I'm going to forge ahead. Cool. All right, so now we're going to jump into introducing the financial template that, if you don't already know, is available to you on FOL. It can be found in today's module. It can also be found under the business plan resources. And it is a super helpful document. And it's what action steps for this day and next day are all built around, is using it. Now, you don't have to use it as long as you are using some other spreadsheet program, but I definitely suggest, if you're not using anything, that you may as well use this, because it's pretty great and it does a lot for you automatically. So we're going to introduce how this is going to help you develop accurate, timely financial statements. So the action steps at the end of today's module in the reading, they get you to begin entering the financial information that you've been collecting thus far into the electronic financial template, okay? So I'm hoping to give you some time at the end of this, it depends on when our speakers show up, to explore the financial template and understand the specific steps to complete the financial statements. But show of hands, because I don't think I saw it yesterday, I'm just curious, how many of you have ever projected financial statements before? One, a nod from Steve, it's 2, Rachel 3, Josh 4, Abby 5. Awesome. How many of you then have at least used Excel? Okay, almost everybody. Awesome, great. Okay, well, we're off to a good start then. That's good. How many of you like when things are done for you and you just have to put a thing in a box? I love that too. It's so great. Awesome. Okay.
Who doesn't like that? Sorry. Does anyone put their hand down for that?
Ashley said no.
I mean, I love playing.
Sorry, was that a double negative?
So I'm the one that gets happy when things balance. So like, as much as I like the ease of when things are done for me, I also like calculating stuff myself.
Yeah. Well, you're the outlier here, Abby, just because you're like,
I'm the anomaly.
Yes. My partner, Kelly, she's the same way. Like, all her spreadsheets are customized and made her way, so she knows where all the things are and she can find it. And I think that's just the accounting brain in people like you guys. And I definitely respect it. Wish I shared it. Awesome. Okay, so why do we do this? Why do we do this? I'm sure you all know why do we prepare financial statements, but the idea is that preparing accurate, timely financial statements, it's the only way that we're going to test financial feasibility of a business against your own personal financial goals. So as you begin to prepare these statements and it starts to feel frustrating and hard, I want you to take a look back at the items that you wrote again in that right column and that described what you stand to gain by understanding this financial information, okay? Because doing this, it's going to help you meet whatever goals you set out for yourself. And it's going to give you control in your business. So we're going to get into this financial template. So what's going to help you complete this and get good with the template? Well, I'm going to give you an introduction to it. We're going to walk through it. And then you're going to get time on your own to prepare these statements, and any other resources that we've made available on FOL will also be helpful, like the sales projection template as well. So you may have, obviously some of you may have accounting options already for like QuickBooks or whatever else you're using. That's totally fine. But I just want you to remember that even if Excel is a big struggle for you and even this template's not great, it might be well worth the money to have a professional like Ryan or another accountant at least do your kind of initial chart of accounts setup and just have them customize it to what makes sense for you, right? You can pay somebody for that. So, but either way, you need something, some type of template, some type of financial tool as you move forward in your business. So the most difficult part of projecting financial statements is gathering all that information, right? But that step's actually nearly complete for most of you. So you've already been gathering all this info. The rest is actually super easy, just plugging it in. So this is what it looks like. We'll go through it in a second. So the financial template, it includes a whole bunch of worksheets all down along the bottom here. And these will help you estimate the potential profitability of your business. And the template automatically calculates the balance sheet and the income statement based on the information that you enter, okay? So as you proceed through the worksheets, one step at a time, which the worksheet actually lays, or the template lays out for you, you'll complete the statements that you need in order to make better financial decisions. 1 second, my boss is asking to leave. You want to go home early today? I guess, that's fine. See you later. All right. Where was I? So here is a list of the template worksheets that you're going to use in both modules 8, which is today, and modules 9, which is Tuesday. So for module 8, we're talking about, you're going to go through the company information worksheet, the startup company setup worksheet, the sales worksheet, inventory worksheet, and operating expenses worksheet, okay? And then module 9 is about capital budget, equity and debt worksheet, amortization schedule if you need it. So the financial template worksheets that you're focusing on today are centered around profitability, because that's what we've been talking about. So therefore, the components of profitability are supposed to be entered: sales, inventory or cost of goods sold, and your operating expenses. You'll also enter those startup estimates. And then for those of you who are already in business, don't worry, we didn't forget about you, because there's options for you as well. So you may not need the startup estimates, but there's some in-operation balance sheet stuff that you're gonna have to enter too. So the worksheets in module 9, again, they'll center on cash, so non-revenue cash received, and also non-expense cash expenditures. But let's jump over, let's switch screens here. That's the wrong one. Here we are. So this is the template. Can you guys see it? Do I need to zoom in more? It's clear? Cool. Okay. So what do you do first? Okay, so when you initially open this file, you downloaded it, Excel might prompt you to enable macros, okay? You gotta enable the macros if you're gonna use any of the printing options within the workbook. There's some instructions here about Mac users, blah, blah, blah. If you're running like this template was a bit old, so most of you that have Office now, you'll have absolutely zero issues unless you're running Microsoft Office that's like ancient, then you might have a problem. But if you have an issue, just let me know, we'll help you work through it. So you're going to save the template to your hard drive. Make sure you use another name, so duplicate the file, because that way you can always go back to a fresh version of this template in case you want to start over or create another plan. So that's really important. So that's the first thing you do. Save it, create a duplicate, keep that one for backup. So what's in this template? So as I said, the template consists of worksheets where you can enter data. And these are all along the bottom here. And it's running a little slow, okay? So we have our company info and existing company setup. These are not necessarily worksheets that you'll use that often. You'll kind of be one and dones with these bad boys. The rest are your worksheets you're going to use more often, like your operating expenses and your, wow, this screen is really small. Sorry, guys. Monthly income statement is in here as well. And everything up in blue, there's always instructions up at the top. There is also an instructional document that comes with this. It's on FOL2 that walks you through everything step by step by step, okay? But we're gonna just go over a little high level right now. So these worksheets are presented in a logical sequence. So left to right, you're meant to go through these one at a time from left to right, okay? And the idea is, yeah, presented a logical sequence, and that's going to help you project your financial info. So the projected financial statements will automatically be assembled as you enter information into these worksheets. Now, it's important to note the financial template is not designed for columns or rows to be added or deleted. So Abby probably would hate this. If you do that, you run the risk of losing or corrupting the preset calculations. If you're not great at Excel, I definitely suggest don't do it. And just keep these locked. If you want to mess around with it, go ahead. Feel free, experiment. You just need to unprotect the sheet, okay? Throughout the template, only enter positive numbers, no commas. With the exception, of course, that if you have an established business and you've already experienced a loss in your retained earnings account, okay? So in your retained earnings, you can put a negative number. That number must be entered as a negative on the historical balance sheet. We'll go over that in a second, okay? So don't worry, these details are in those instructions and those are on FOL. So many of the features have been built into the template to make it easier to use. So you should step through the worksheets in the order that they're presented. So you start with the first one, company info. Actually, yeah. Company info, right? Okay, sorry. It's hard for me to see here. So there's only a few things to fill in here. You can always go back and make adjustments or change assumptions as you see how your plan kind of works out. Now, the tips and comments, you'll see anything that's kind of highlighted with like a little red triangle there. You want to hover over it. There's a tip about a particular item. You're not sure about what that thing on your balance sheet means. Most of these things will have additional comments and tips and advice. So just place your cursor over it, over the cell, and you'll access the information. If you need to print your instructions, your worksheets, or your financial information, it's super easy with the print buttons provided. So each of these tabs has a print worksheet here. You can print the instructions. You can also print sales data here. And then if you want to just you already know what you're looking for, you're running your monthly analysis, you can go right to this tab at the end, print options, and you can just run it from here. So you can run kind of all of them on one page as well, okay? But in order to use this, if you are printing stuff out, make sure you're enabling macros in order to use the print buttons. Okay, so let's go through the worksheet a bit. So let's go to the first page, the introduction. So introduction worksheet provides just basic information on features of the template. It's a little bit of a summary of what I said and a little bit of a summary of the document provided to you as well. Okay, that's straightforward. Now, the company info worksheet sets up your template by asking 5 key questions about your business. So be sure to answer every question because the answers will help tailor the template to your specific business operations. This is very important for those of you who are a new business and those of you who exist already. So for example, if you answer yes to the question in step 4, right here, okay? If you answer yes to the question, which is your business solely a service provider? Yes or no? The inventory worksheet will not become part of your template. So if you're a service, the inventory worksheet that you see here will go away, okay? Because you don't need it, okay? So I'll just show you how that happens. So in step 4, I'll just type, yes, I'm a service, and it should go away. You'll see it just disappeared at the bottom, okay? So it won't be part of your template since service providers generally do not need to budget for inventory. So if your response to your answer in the question of step 3 is your company a startup? So you have no historical financial data to enter. If the answer is yes or no, the template will prompt you to use kind of one of the following setup worksheets. So right now I have it set as no, my company is not a startup. It means I am an existing company. That opens up this spreadsheet here that you will fill out. So this is an existing company setup worksheet, okay? We'll go over that in just a second. So if I say yes here, my company is a startup, it goes and switches to startup company setup, okay? And I don't know why it's always populating at the bottom. So if you enter yes, this worksheet becomes available. Until you answer the question though, neither worksheet is available. So you might not see either until you put something in there, okay? We'll come back to this in a second. For the tax rate here, I have 12% in here. So for the tax rate, this will vary depending on the company structure that you've set up. If you're self-employed as a sole proprietorship or partnership, you must file your personal income tax return and you got to pay the same tax amount as any employed wage earner, okay? Your business income after deductions is considered as your number from tax day, your annual wage, okay? So there's different tax rates based on that. 12%'s in here because that is the general corporate tax rate in Ontario is 11.5%. This automatically rounds up. But if we're talking about sole proprietors here, like many of you are, it's 15% on the first 48,000, and so on and so forth. It changes based on what you think your taxable income is going to be with what you make, outside the business plus the business together. So you're going to need to look that up. I have a link here for you. I'm going to put in the chat. It's from TurboTax. This is tax rates for self-employed individuals. Here you go. Take a peek at that. Find the rate that applies to you. Oops. Okay. Okay. In step 3 here, we've already done this. Okay. So the startup company setup. Come on, work with me here. It's really slow. There we go. Okay. So this worksheet, that's going to allow you to compile the costs involved in starting the business. So you should have already projected your startup costs. So if you enter yes, remember in step 3 on the previous statement, this pops up. So detailed instructions in the worksheet are going to direct you through the process of entering all of those startup estimates. It's all here, steps 1 through 7. Okay. So if you're starting a business, if you're new right now, you're going to complete this worksheet. Okay. And it's going to be based on the information you've already been gathering through your research. So you're going to be asked how much money you and your investors will initially put into the company, as well as the amount you plan to borrow, as well as the expenditures you expect to make before opening the doors. Okay. Now, however, if you answered no to this question, so you're an existing business like Josh or Brooke, then that's going to switch to, let me just switch again. Again, I've already shown you this. I'm just going to show you the other worksheet, the existing company setup. Okay. So here you're going to enter your most recent balance sheet figures in the historical balance sheet. Okay. These figures will be used as a basis to project ongoing financial reports. They'll help you to build reliable financial projections. And you want to start with the numbers that you already know and you trust are correct. Okay. Next is the sales, inventory, and operating expense worksheets. Okay. So sales, operating expenses, and I can't see inventory at the moment because I'm set as a service-based business. But basically, those worksheets ask you to record budget decisions for the next 3 years because we're doing a 3-year income statement, okay? Now, you don't necessarily have to do this for our program, but I suggest you do it for yourself in the future. You can just do 1 year. That's what we're asking for. But detailed instructions for each of these are in the instructional areas of the worksheets up here, okay? And they're in the instruction document as well in a lot more detail, okay? Now, remember, changes of these worksheets, because these are connected, the inventory, sales, operating expenses are connected to some other worksheets here. So changes here will automatically update on your monthly income statement, okay, which is right here. So anything you change on these will update on the income statement. They'll update on your monthly cash flow report as well, which is here, your cash flow report, as well as your year-end income statement and your year-end balance sheet and the financial ratio analysis as well. So all of these will be automatically calculated from what you put in to the sales, the inventory, and operating expenses. There'll be a few other things you're going to have to add, but for the most part, the crux of this work is working in those 3 worksheets, okay? Now, 2 additional functions are here for you. The amortization schedule is here. This is basically, it helps you to figure out principal and interest payments on your loans. If you don't have a loan, you don't need it. And then, of course, I've already shown you the print options tab as well, okay? So it's pretty easy to go through. All the instructions are there, and the instructions in addition to are in the other document as well. But if you have questions, if you need help, make sure you ask, okay? Come and see me, let's sit down, let's go through it together. Just 1 second, I gotta turn the back on. There we go. Okay, so we're getting back into the PowerPoint slides again. So where does this information that I'm going to put into the financial template actually come from? So throughout this program, you should have been working on your financial plan all along. You know, the readings, the reality checks, the activities, and the action steps should have helped you to establish financial goals along the way. And now it's kind of time to put it all together, okay? All works to help build the financial plan. So if you go to page 311 in your manual, this is actually a breakdown. So I just kind of snapshotted it from here, but definitely recommend you go to this page in your time. You're going to see this table there, okay? And this table identifies the times throughout the program where you've been asked to consider your financial plans, okay? So if your ideas aren't fresh in your mind, refer back to these reality checks and action steps referenced here to help in the projection process, okay? After entering your startup, sales, and expense estimates into the financial templates, you'll be able to check this information for reasonableness as well as accuracy. And that's what we want, right? Be as accurate as possible and as reasonable as possible with our estimates. Now, some of you might be thinking, okay, well, actually, what time we got? A little bit of time. So sorry, I just wanted to go through this sec. I jumped ahead a little too quick there. Sorry, guys. So for the sales worksheet, that's all about this module that we're in right now. The reality check sales projections is there, as well as action step 8.1 is literally just all about projecting your sales. And we'll talk about that a little bit after. The inventory worksheet as well is in this module. Operating expenses, well, we did that back in module 3. We did some reality checks. We did, as well as the action step 6.3, which was all about writing those financial assumptions as well for your marketing. We did our capital budget worksheet, which was in module 3. It was in our reality check around startup planning, as well as our fixed asset purchases, and the financial facts worksheet went through all of this in detail. Okay, so it's all there. Make sure you go back and, you know, if you have them available to you, start gathering them all together. I know if you have the Word doc or the PDF, you may want to just copy some of those over and put them all into one file so you can kind of see everything kind of all laid out together. Okay, so you might be feeling right now, okay, well, he's asking me to go back and look at the stuff I already did, but maybe I didn't complete any of this work yet because Leap-In has been intense and it's been hard and I haven't had time and we've got lots going on. It's totally okay. It's totally fine. The previous work, you know, was designed to help you kind of prepare up to this point, but it's not necessary to continue. The bonus is that, you know, future information gathered from this point on, you're just gonna now, instead of putting in all these other sheets and spaces provided, you can just put all of it right into the financial template. Okay, you gather those projections now and enter it into the financial template. So basically, you just saved yourself a bunch of steps if you've done nothing at this point. Now, if you've done no research, well, it might be time to get to work. Okay. So you might be feeling that you've taken in as much financial information as you can. I'm sorry, that sucks, but that's okay. You can begin by just starting by writing an action list of things that you want to just do after this module related to your finances. So these steps might include maybe meeting with us, Kelsey or I or Jenny, to get just some tips on where to start. For example, I might suggest you go back and reread modules 3 and make sure you read module 8. Or I might say that you just need to finalize your sales projections. Just do the sales projection exercise that we went through today and do it yourself. And that actually will start helping move you forward. Okay. So if you kind of hit the wall, it's okay. Come and chat. Just, I find writing out a list of things you got to do really helps you kind of grab hold of that. Okay. And remember, we only got one more day left of finance. So it'll be over very soon. Okay. I know this is a duplicate of that slide. Oh, yeah, I guess I made 2. Sorry. Lastly, whether or not that you've completed the financial facts worksheet that I've mentioned many times, it's now time to stop avoiding and start working on your finances. And this template is going to be very helpful to kind of force you to do that. So any information that you have is better than no information, okay? It's going to be used as just the basis for projections, right? So we're just making some assumptions here. We're making our best guesses, and that's okay. It doesn't have to be perfect by any means right now, okay? This isn't something that you're going out to hand your bank right at the moment. Now, for some of you, it might be. You might want to put your best foot forward, but for others, if you're feeling lots of pressure right now, it's okay. This is going to be just for you, and it's okay to take your time with this, okay? The thing that we really want to do, though, is identify when we're going through the financial template where information is lacking, where you're making some serious guesses, okay? This is going to help you prepare to prioritize any collection of additional information. It's why we gave you the financial facts worksheet in the first place, to start helping you see like what you do and do not know. And some of this information is going to take longer to acquire, so it's okay. Have patience, take your time. That's why you got another month to submit this if you want as well. But we're not going to drag you over the coals over a little number that might not be accurate on your business plan, okay? But we do want you to eventually get a grasp of this so you can get more comfortable over time and get better at this and feel more confident with your numbers. Okay, so now we're going to jump into our action step 8.1, which is designed to help you project your sales, okay? And it's using the financial template completely. It's very similar to how, it's using the sales projection template, not the financial template. And it's exactly like the example we did earlier with wood grain puzzles. So this is going to help you begin to generate your financial statements, specifically the income statement, okay? So how much time do we have? We have 20 minutes. So we're actually going to take a little time, I think, and go through this. We'll see. Okay. So this is on page 325 at the end of today's reading. And you're going to use the sales projection tool that I showed you, this little bad boy here. And you're going to estimate sales and analyze profitability using the comparative sales method, the average sales method, and the bottom-up method. And make sure that you're prepared to support your estimates with any researched facts, especially when you're doing the comparative method. Make sure you're documenting any assumptions. Okay, guys? So, come on, work for me here. There we go. When you're going through this, you may have a little bit of difficulties. Now, some common difficulties that you have might be that the variables associated with your business don't fit well into the one-size-fits-all sales projection templates. Like I said, I was showing you units sold, there was quarterly, weekly, monthly, yearly. It's okay. Make sure that you understand the basis behind each method of projection. You don't need to specifically use that template, but I want you to understand the basis of like what goes into doing the method of the projection, okay? That method can be applied without using the templates. You can do it on paper or however you want to do it, okay? But you need to do it. So you can modify it, you can unprotect the sheet, you can make some modifications. If you want to use that, you can make your own template as well. But one way or another, you got to do it because it's very important for you to start figuring out what your goals for your sales are going to be. Another common difficulty is that you don't have all the information you need to complete the projections. That's okay. Just plug in the information that you do have now and estimate the missing numbers for now, okay? You can prove the estimates later, okay? The other thing could be that the math calculations or Excel confuse you. That's very common. I'm one of those people as well. Way to get over that is just try to come up with your own way of estimating sales using the theories that we talked about today, or something else that you found online, or a way that just makes sense to you, okay? The important part is that you just look at your business comparatively from the bottom up and with the average sales kind of in mind, and you can figure it out from there. Just be prepared that if you use a different method, you're going to have to maybe explain it to us in your presentation, okay? Some key points here. So consider the changes you want to make to the price to improve overall profitability. Okay, so this is something that I think everyone's mind immediately goes to. And this might not be you guys to leap in because we're drilling a lot of things into, but we work with a lot of other clients. It's usually if they want to make more profit, they just need to increase price. It's something that gets said to me over and over and over again. But I just want you to be aware of the potential consequences. Again, I know we mentioned it earlier, of raising or even lowering prices, because being a bottom of the barrel price as well is also dangerous too. You know, most often the lower the price, the more products and services that you can sell, right? But in some cases, however, you know, it causes customers to think of you differently. You're seen as a low-cost provider, seen as maybe less quality. You know, can you sustain the volume that comes with that if you do increase sales? You know, and are you being profitable? You know, often, you know, increasing the price gives the customer also a perception of increased value, and more products and services sell. So there's a fine line of balance here is what I'm trying to say. And I think I'm just butchering what I wanted to say. I was really tired when I was writing this. But basically just be very careful when you're adjusting price, either up or down. It's just, there's a lot of consequences, and make sure you talk with your advisors when you do so, okay? Last key point here is that it's critical to project sales in more than one way. Don't just pick one of the methods here. You need to use a few so that you can average out between them what is going to be the best estimate. Once you've got a few years of data under your belt, you will rely very little on these, and you'll use comparative data from your years prior to make your budgeting projections, okay? 10 minutes here. We're going to come back to this possibly. So now that you've looked at this, you know, one component of profitability, you're going to begin to look at all the components together as you begin to project your 3-year income statement. And this is what action step 8.2 is all about, is that 3-year income statement. And this one specifically uses, this action step uses the financial template. And this is it's a time consumer. Going through this action step is going to take you a while, so give yourself some time to complete this, okay? So this is where you're finally going to jump into the template. So how do you actually get started? Well, you're going to step through the worksheets like I went through earlier that are included in the financial template. And remember, each worksheet, they've got that instructions at the top on how to enter the information. And these worksheets that you're going to use for this, action step include what you see listed on the slide here: the introduction worksheet, the company information worksheet, the startup company setup worksheet, and then sales, inventory, and operating expenses worksheets. Remember, if you're a service, you can eliminate this one as well. So you've got one less step. Congratulations. So the introduction worksheet, that's just valuable information, features the template again. Company information worksheet, that's where You're going to set up your company info, record your company's current financial position. The startup company setup worksheet, that's where you compile the costs involved in starting your business. And then sales, inventory, operating expenses, that's where you're going to record budget decisions for over a 3-year period for yourself. Okay. Now remember, as I said, changes to those worksheets, those automatically get updated on the income statement, cash flow report, year-end income statement, year-end balance sheet, and those financial ratios. Isn't that nice that it does it all for you? Okay. Important thing to note here. You need to make sure that you set enough time aside to do this, to go through this action step. If you've missed all the other ones up until now, this is the one you do not want to miss. So take this weekend and start going through this, okay? It takes a considerable time commitment to start plugging this stuff in, especially if you're not super great with Excel, okay? Or whatever program you're using. So after completing this action step in 8.2, at the end of it, when you're in the manual, it recommends that you go back and revisit page 312, and I suggest that you do. It's called Reality Check Financial Statement Review, okay? You can review your financial statements to determine how profitable your business is by going through this set of instructions. So don't forget this part, because it's not just good enough to put everything in. It's like, okay, what did I learn from this? And that's what that step is meant to do. So don't skip it, okay? So I'm wrapping up here. It's the end of me, almost. So what did we learn today? What are we wrapping up? So we now know that understanding key financial terms and concepts, well, they help you plan and maintain a financially successful business. We learned that being able to accurately estimate the sources of revenue and sales and expected costs of a business, well, that's the only way that we can truly determine how profitable we will be. You know, our hopes, our wishes, and dreams are not good enough. One way to affect profitability is to adjust pricing, which is a component of sales. And this is a critical decision because this strategy can have both positive and negative effects on sales. And lastly, we learned that there is other ways to affect profitability, and those are to either increase or decrease the components of profits, which is, remember, sales, cost of goods sold, and operating expenses. So those are the 3 areas you want to get very, very familiar with and get comfortable with so that you can maintain control over your profitability. Now, as a review, again, action steps, there's 2 for the remainder of this week. Action step 8.1, projecting your sales. 8.2, doing that 3-year income statement. Now, completing these is going to put you well on your way to projecting a healthy financial situation for your business, hopefully. There's also module 9. If you want to take a sneak peek at it, I'll have it up later today. That's what we're going to be talking about on Tuesday, monitoring your cash flow and seeking funding. And speaking of seeking funding, in 10 minutes, we've got Libro Credit Union and 2 gentlemen from Libro joining us. I don't know why their slide is not showing up. That's really strange. I think it's there. Yeah, Thomas. Thomas and his counterpart, Nate Tapper from Libro Credit Union, are going to join us. And they're going to talk about perspectives from a lender, from a traditional financial institution. They're going to talk to us about what it takes to get a loan and work with a bank and build a relationship with a credit union like Libro. And speaking of them, they just joined. So last thing I want to say is congratulations, because successfully completing this module, it's pretty hard to do. So definitely it may not happen during this, but at least you've made it through now 2 full modules around financial planning, module 3, now this one. So pat yourself on the back. It's good. You should feel good about going through this and now getting a bit better of an understanding of how to control your business from a financial perspective. For those of you that feel you still have unanswered questions, please book some time to see us and chat. And know that your ability to learn new concepts and your ability to experience personal growth in these critical areas of entrepreneurship, it's awesome. But remember, everyone here in this group works at a different pace, learns at a different pace, and that's okay. Just because this is making a lot of sense to one of you doesn't mean it's making a lot of sense to others. okay to take your time, work at your pace. I am absolutely terrible at numbers. It took me a long time to get better at it. I'm still learning every day. It's an area I just always try to avoid, and I got to kind of take it head on in order to get better at it. So I'm learning as well as you're learning. So last reminder is that in the next session, we're going to focus on cash flow. So if you're, cash is king. So it's the last most important part of financial planning, and helps you really to understand the health of your business. So I'm going to give you guys another quick body break now. Take 5 minutes and come on back, and we'll have Thomas and Nate joining us. And yeah, awesome. See you guys soon. All right. Great. We got Nate and Thomas are here, guys. Before we jump in, everybody give them a nice leap hello wave. Say hi. Awesome. Nate Tapper, Thomas Sumpter are both here from Libro Credit Union today. They're going to be taking us through a pretty great presentation, talking about all about what Libro can provide for you guys, as well as just getting more of an insider's perspective of working with a financial lending institution, and how to get yourself best set up for having good rapport, as well as how to possibly get what you want from your lender and from your banker. And it's great to see some faces. If some of you here don't have a bank that you're currently working with for your business, well, now you know two people. You have two faces, two people to connect with. So Thomas, Nate, I'll let you guys introduce yourselves so we don't have to do the awkward formal reading of the education that you will have and all of that jazz. So we're just keeping it casual today because I've just drilled them for 2 hours on going through detailed financial projections. So take it away, gentlemen. Thank you for being here. We really appreciate it.
Perfect. That wave was amazing. I haven't had that happen on the call yet. So that was fantastic. So great job off the bat. Great to have everybody here today. I'm Thomas Sumpter. And obviously I have Nate Tapper with me. I am a credit analyst in business banking here with Libro Credit Union. I've been with Libro for, I'd say about 3 years now. Jumped off the stage at Western with a degree in business and just came right into commercial banking, started as a teller and moved into, account manager, trainee, account manager, and now credit analyst. And it's been amazing so far. For me, it's all about relationships and building community. So that's what I really like. The entrepreneurial spirit has been amazing, and I love that I get to continue that work in my current capacity. So that's a bit about me, and after I'll finish the introductions, I'll actually start sharing the screen. Okay.
Great introduction, Tom. Thanks for leading into me so well. So me and Tom work kind of side by side sometimes. I'm more of a relationship manager. I'm a small business specialist with Libro Credit Union. I've been in this role I think just over 1.5 years now. Previously, I was with the credit union in a couple of different roles. As a small business specialist, typically what I do is try and understand what our business owners are trying to achieve, and then find a way that we can help them achieve that. Generally, it's going to be through assisting with financing, operating accounts, as well as what products and services we can have that we hope will assist them. So mostly this encompasses the relationship portion of what we're doing. And then it kind of goes to Tom on the other side. We'll talk about how the two relationships tie together and what that means for you guys.
Awesome. So can you guys let me know that you can see my screen okay? Presentation's up. Perfect. So the first piece here, now bear with me because it's open a couple pages here, is I just want to touch on what is Libro. So do you guys know what Libro is? Have you guys heard of a credit union before? Different between a financial institution? Anybody? So I'll just beat you guys to the punchline. So basically, a credit union is different from a financial institution because financial institutions have a fiduciary responsibility, and that it means they have a responsibility to their stakeholders and shareholders. So they're traded on the market to raise profits and give back the highest return, right? At Libro, we're a credit union, and our responsibility is to provide profits, and you could say, all the revenue or whatever that is, back to the community and our stakeholders. Our stakeholders are anybody who comes into Libro, opens up an account, starts working with Libro. You're an owner, you're the stakeholder, and that's the main difference. So you have a different kind of connection, right? Our responsibility is back to the community rather than anyone who owns an actual share. So a little bit about Libro. Libro is the 3rd largest credit union in Ontario, 12th largest in Canada. We have over 3.6 billion in assets, 32 branches. We continuously keep opening more. I think the newest one is in the Waterloo region, over 105,000 owners, 640 employees. And the kind of little differences that we have in terms of our structure is at a credit union, you get profit sharing, meaning for every $1,000 you have with Libro, you get about 95 cents back each year. And that's a little profit share goes into an M-Share account. You get more personalized advice and coaching. You get experienced account managers and trusted relationships. So what we like to say is, I've said it before, we're all about community and relationships, but we really like to think that if you give us a call, send us an email, we can get back to you, with some urgency, with more of that kind of peace of mind. So that's really on a very high level what we're all about. Some people think credit unions are all about credit. Some people think they're all about just a union. We're actually a financial institution. So we can offer all the same kind of commercial services as we can consumer services. So whether it's your current accounts, your operating lines of credit, to your personal checking, personal mortgages, anything that you would need like that in terms of banking. So if you've got it from, any of the big F5s, we can definitely provide you the competitive service at a credit union. So just to touch on some quick points, why this is so important and why entrepreneurism and small business is important. To me, the most important line of this is 98% of Canadian businesses are defined as small business. It's a fact. It's very important that we home into this. The government understands this and why we like to, as Libro Credit Union, like to work with these small businesses. These are businesses, I believe, under, I think it's under 5 or 20 employees, so really small. So just take that into perspective, right? 98% of Canadian businesses. Keep going. So kind of getting into it a little bit more, and I'm sure you guys have talked about it in your classes, the reasons for your business not succeeding. And we'll start this conversation now. Maybe you started your business at the wrong time. Maybe you started your business for the wrong reasons: lack of experience, not enough money, location, and lack of a sound business plan. And these are all pieces that we're going to keep on covering in this presentation, but just as very high level, maybe you didn't spend enough time, looking at where you need to put your business or put that effort into the business plan. Did I go too fast? So there we are. We're on the process of getting a loan.
Perfect. Thanks for leading into that for me, Tom. Process of getting a loan, pretty important if you're looking for financing, to at least have a pretty good understanding of what you're looking to do. If you just want to advance this slide for me there, Tom.
Definitely.
So we've kind of filled this slide out just from an applicant's lens, just in point form. What's your objective or purpose? Why do you want the loan? What's it for? You really need to understand that, or you probably shouldn't be walking in somewhere asking for one. What are your options when it comes to borrowing a term loan versus a line of credit? Do you understand the reasons and differences between the two products? If not, that's completely okay too. Ask questions. That's what people are there for. They work for you when you're walking in that door. Considerations about the structure of your business or the ownership. If you're a sole proprietor versus a corporation, that's going to completely change the landscape and how that impacts your ability to borrow. When do you need the money? If you need it now, you should have been in there 2 weeks ago, or at least let them know that. Communicate some sense of urgency. How are you going to get the money? Go through the application process, understand what's involved in that. What's your backup plan if you can't get the money? What are you going to do? Always try to have some sort of contingency plan in place, or give yourself enough time. Which FI is most aligned with you? So Tom spoke a little bit about, the credit union and what we can do, what we try to do differently, but other FIs do different things as well. So for an example, BDC, which is Business Development Bank Canada, an amazing resource for startup financing. But at that same token, they don't generally provide any operating lines of credit or operating accounts, right? So you might have a loan there and they're a good institution for that, but they can't really assist you maybe as much with the operations side. And then make sure your information that you have is detailed and up to date. So now that we kind of built out what's important to know before you come in, generally, most of the products and services are going to be the same at most institutions. It's going to be the relationship you have with the account manager that gives them a strong understanding of what can assist you most. So we just listed a couple typical products and services here that are generally offered. A business overdraft works very similar to an overdraft on a personal account. Typically, it's offered between $1,000 and $10,000. Very minimal security, if any. We'll go over security a bit further in the presentation. Business line of credit. So again, this is typically it's going to be attached to your operating account and provide you with some working capital, maybe a bit of money between when the money's coming in and your accounts receivable and when money's going out with your accounts payables. Business loans and mortgages. Loans will typically be for equipment, inventory, things of that nature. Mortgage, very similar to a loan, except it's secured by real estate. MasterCard or Visa, more of a payment solution. Account types, going to be based on the account that you're using. Foreign exchange may be necessary depending on if your business is cross-border. And then merchant and payroll services are all good things to discuss as well, depending on the needs of your business. Documentation is going to be pretty straightforward as well. Personal net worth statement, tax returns, notice of assessment, a business plan, existing or projected financials, depending if it's a new or existing business, registration and purchase and sale agreements if it's going to be a mortgage of some sort.
Sorry, I didn't see all the additional points.
I saw them just keep sort of coming in there.
Lots here, but what's important is this is very high level, everybody, right? This is all the kind of nitty gritty pieces, and what we've tried to do in this presentation is kind of give you the high level bits here and then kind of work in the reason why after.
Yeah, sort of touching back on what Tom said there. We're firing a lot of information at you guys as we go through this slide deck. During our discussions, if there's any questions, I'm not sure if you can unmute yourself, spotlight yourself, raise your hand. Feel free to jump in. We don't need to save them till the end. At the end, we're going to show a couple examples and hope it's a bit more interactive as well. But if you have any particular questions throughout the slides, feel free to ask them now because it could provide more clarity for future slides. Okay, keep going.
Do you want me to take this, Nate?
Yeah, you can.
Okay, so what is your banker looking for? So again, we're flying through this because I want to get to the real good parts of the presentation. Not saying this isn't the best part, but the best thing you can take from this presentation and this slide right here is that when you approach a financial institution, we are not investors. I'm not Kevin O'Leary sitting on a Dragon's Den panel. That's not who I am. We are lenders, not investors. So instead of wondering how your business is going to be doing in 10 years, 5 years, yes, we do worry about that in terms of your projections, but I'm looking to see how you can repay your loans today. I don't own an equity stake in your business. I'm looking at straightforward, what happens if something goes wrong with your business first? How can you pay for your loans? So two differences we need to understand, because I often get people on my desk or at my desk saying, don't have anything right now, but 5 years is going to be a $5 billion company. It's like, okay, well, let's slow that down a little bit and let's see how we can just work our relationship as a financial institution. Again, we've talked about business plan, capital investment. By capital investment, we typically mean skin in the game. We like to value your contribution to the business. It means that you stand behind the business. Realistic projections and all these pieces like this we already talked about. Personal guarantees. So here's my favorite part about the presentation. And this is from our lens. This is what happens when stuff hits my desk, your application, and what I'm looking for. So if you're going to take anything away is what does a credit analyst or an account manager look for? This is the meat and potatoes of that. So we look at the 3 C's. If you Google it, there's probably 5 C's, but the 3 C's that we look at today are capacity, capacity, character, and collateral, right? So does anyone want to tell me why these are the most important pieces?
Don't be shy, guys.
Because they kind of tell you what you need to know about the person you're lending to.
Yeah, definitely. So they can give you clarity, right?
Yeah.
So capacity would give you clarity around.
Capacity would give you clarity about how much credit they can handle as a business. If uh, this is going to be a debt that they can pay off quickly, or if it's going to take a longer period of time. Character would be like their credit history, what kind of borrower they are, if they make their payments on time, things like that. And then collateral, if they have anything that they can put up to support the debt.
Yeah, 10 out of 10. That's great.
I'm an accounting major. It better be.
Presentation's done. That was fantastic. So that's exactly what we look for, right? Those 3 C's. When it hits my desk, I look. So if a business has, weak capacity, collateral, character, I look to mitigate the risk around these 3 areas, and that's how we're able to provide some sort of facility to the applicant. So let's get in here a little bit more. So capacity. So we just talked about this. We want to know the cash flow of the business, and we want to know its ability to repay debt. So this is when, if you don't have cash flow right now, this is when projections really are valid. This is when your background information and, invoices or contracts showing that you have the ability, proof and legitimacy behind this cash flow is so important. Are there other sources of income? What is actually going to end up I like to say, in your pocket at the end of the day, and what's coming out? And then how much of a wage is required to repay the existing debt, right? We understand that your business is going to have certain other costs. Maybe, you're not paying yourself a wage, but I like to put that in there. So we look at this level of capacity through multiple different lenses. We have a couple ratios. We like to see the Excel spreadsheets, business plans, and whatnot. And I'll get into some of those ratios after. But this is the good starting point. Can they pay the loan? Can you afford this loan? Can you afford what you're trying to do? I'll look at it from the lease perspective. I'll look at it from your utilities, taxes, put it all together and see how it can work. If anyone's ever applied for their own personal mortgage or a student loan, they do the same thing, right? So we talked about capacity, and that's the cash flow and repayment ability. The most important piece for us after capacity would be the character. And I would put this in the important language as Libro credit union. At the beginning of the presentation, I said we're all about relationships, right? This is what it is. It's the character. And even though we're all virtual and meeting on a virtual platform, we still like to do that. We still like to have face-to-face interactions through the, Microsoft Teams or Zoom, just like this, right? So it's so important for us. But on top of having those open lines of communication, we like to see the credit history of the borrower, credit scores, experience speaks volumes. We're going to talk about that later. But this is all about the person, not the business, but the person, right? Why are they going to be successful? Why, right? How does this person mitigate the risk moving forward with the business, right? So we can actually, from the actual credit history or in your credit report, we actually get you to fill out this thing called a personal net worth statement as well. And what you do is you write all your assets, liabilities, and we pull your credit report, and we can actually see, and that's why it says honesty and integrity at the bottom here, because we can actually see if you're providing all the valid information and the validity behind it. So after capacity and character, we have our collateral. So if we're going to provide money, we like to secure our money so it just doesn't disappear, right? This is kind of the skin in the game piece. It's like buying real estate. If it's your personal home, great example is that's a great piece of collateral, right? It's a very solid asset. So in the personal world, you can lend up to 80% on that, depending on what kind of insurance you have. Typically, you'd have to provide 20% of the down payment, and that's typical. Now, these different kinds of collateral have different kinds of risk associated with them, and therefore risk equals a different interest rate. Real estate's going to get you a lower interest rate, equipment a little higher, accounts receivable a little higher, inventory a little higher, right? So typically see that kind of trend. We also look at this holistically in combination with the capacity and collateral character. So it's really good to understand this piece. But this is, like I said earlier, really understanding the value of that asset. Terms and conditions, I'm going to fly through this one because I really want to get to our examples and have great conversations, but this is kind of like how we structure our loans. So amortization, the period, how long this loan lasts. We usually do match it to the asset. That's why you have real estate loans that are longer and, you know, equipment loans that are shorter. But we usually, what we like to do is, I won't make sure, hey, if you can pay this off with meeting the minimum ratio in 5 years, I like to have an open conversation with the applicant saying, you know, okay, maybe in 5 years, but what are your plans? Are you going to be cash short in 5 years because you're expecting to open up a new business or whatever it is? We like to look holistically at these approaches. Some other, go back here quickly, but some of these other conditions are all parts of the negotiation process and application of the credit, usually come in after you have a meeting with your account manager and they kind of walk through the whole deal. What are your interest fees? What are your personal guarantees? All the pieces that are the conditional pieces that we need. So they could be appraisals, you know, invoices, whatever it is for the deal. Going back to capacity quick here. If you're going to do any kind of number on your loans, do the debt service ratio. If you're applying for a loan, I know this is a huge jumble of words here, the net earnings plus interest, amortization and everything. Can you guys see that? Or is it just, yeah. Basically, you want to take what you make over your principal and interest of your loans and get a ratio for amortization and interest. We like to get a ratio of 1.25 to 1. That means that, you know, you can pay your debt with an extra 25 cents at the end of the day, $1.25 coming out per dollar going into debt. That gives you strength to actually have additional cash flow. So if you're going to do that, use the debt service ratio. Loan to value is just your percentage of what kind of asset we can go up to on lending. Your next two pieces are your working capital. I know this is getting boring, but working capital is just your, you know, your capacity cover your short-term debt obligations. This is basically your inventories over your payables. Debt to equity, I like to get a 1-to-1 for starting businesses. This basically means I like to see that you are contributing some sort of, you know, skin in the game to the business. 1-to-1 is quite, you know, optimistic for a new business as well.
Thanks, Tom. Okay, so I think we've had one person engage with us so far. Maybe we could get that number up a little bit. Has anybody heard of this program? Is there any familiarity with the Canada Small Business Financing Program whatsoever?
Tracy has.
I don't see Tracy on the top there, but do you have any questions about it? Have you used it before? What was your experience with it? Did you just research it?
I've just kind of researched it and like looked into it kind of briefly. I've also been on the website quite a bit, like looking at different financing options for us. So that definitely has come up.
Awesome. No, that's a great point. I think the starting point for a lot of things is doing some research. This is a program I recommend to many people on a very regular basis. This program, it really assists newer businesses and existing ones, but just to tie this back into the 3 C's, typically newer businesses might lack one or a few of those C's, and a big one for a new business being collateral. So you have a lack of security that most traditional or more traditional methods of financing would provide. So the CFSBA program, if you just want to advance the slide for me there, Tom. The CFSBA program uses a little bit of, you know, the government's security, which minimizes Libro's risk and gives us the ability to provide financing, maybe in situations where we would be a little bit less comfortable. So this program can be used to finance acquisitions, whether that's a building, improvements to one, so leasehold improvements, tangible capital assets for the establishment, that would be your leasehold improvements, as well as equipment. The assets must be necessary to the operation of the business. That seems pretty logical, but you'd never believe some of the things people have asked to try and do, although I commend anybody who's putting in the effort. It goes up to $1 million, so the ceiling limit of that's quite high, and 90% of the eligible costs can be financed. The one thing to keep in mind is, depending on the value of what you're looking to finance, you might not necessarily want to use this program if you don't have to. I usually, when I do it for myself or with our owners, I'll try and submit the application with this program in mind. And then if we're not able to proceed otherwise, I'll use it. And the only reason for that is because there is a fee associated with it based on the amount that's borrowed. It can be amortized into the loan as well, though, to keep it in a payment structure so it doesn't strap you too much. But the main thing to understand is it gives you some flexibility if you don't have the collateral. Rates are actually monitored as well and set by the Government of Canada, which provides you probably a more competitive rate than you'd be able to obtain on your own using, some unsecured source or something of that nature. So definitely take a look at that program, depending on the nature of your business. I've found it very helpful in a number of industries and different segments. Some of the tips on here, they're always things that you should have at the top of your mind. And I'm sure they're things that you work on with the LEAP program. But it's just something to think about on a regular basis, right? Having a cushion for cash shortages. It's nice to have some reserve funds. I know that's not always possible when you're starting a new business, but at the same time, you don't have to draw all the money that's out of the business. If you have a bit of extra, leave it in the business in the form of retained earnings. Not only does that give you some cash for a shortage, but your balance sheet's going to look stronger if me or Tom ever had to review it. Find the right advisors and the right ones for you, whether it's me or Tom or somebody who works somewhere else. It's really important to understand, your relationship with your advisor and how there's some sort of chemistry or cohesion there. That's not just an advisor. That can be an accountant. That could be a lawyer, right? So just have an idea of who you plan to utilize and what tools are available to you. Make your business plan a living document, right? You don't pitch it when you're done showing it to your lender. Actually try and eat, sleep, and breathe that. Not only is it going to make it easier to pitch that idea to a lender or somebody else, but it's going to give you a stronger idea of how to manage expectations, forecasts, and projections. And then build a best and worst case scenario. It's a lot easier to prepare for the worst and, hope for the best kind of thing than, just hope everything goes well and then end up, kind of in a difficult spot. I think we just have a few more tips listed down here. So your ability to differentiate yourself, paramount. There's a lot of businesses that are offering similar services or products. What makes you different? Right? What's your competitive advantage there? Be organized, prepared, and professional. Sometimes things seem to go without saying, but common sense isn't always common practice. So they're just things to keep at the top of mind. Be passionate about your business. If you don't care about your business or don't think it's going to succeed, then I don't know why you'd be coming to me asking for money. And that's just being completely honest. Know your numbers. If somebody asks about your net operating income or what your expenses are, you have to know those things, or at the very least, depending where you are in your business life cycle, have a good accountant and they can bail you out of a lot of situations there. And then I think this might be the last one, but there are tons of business tips from many people, but anticipate obstacles. Don't have last minute pleas for money, right? Always have a plan and a plan B and a plan C.
Yeah.
I think the last slide, we just have a couple of additional resources on here. Most of them I think we've touched on. Small Business Center is a good one. CFSBA program at the bottom. So just a few other items there. And I think we're getting there, Tom. I think
so
the main example part. So we're on time, which is good.
Yeah. So there's a lot of information there that we just went through, right? And I would encourage anybody to always reach out to us if you have any other questions. I know there's a lot there. Tips and tricks that you probably heard before, the 3 C's you probably heard before. But if you want more information, just always reach out to us. We're super accessible, email. So try that if you need anything answered. So we wanted to make time for this. This is the new piece that we haven't done before with LEAP and in our presentations. It's trying to build out an example. So what we mean by this is I'm going to kind of lay out a business synopsis, and I'd like some input and your help group as to what questions would you like to know. So basically and this is a real example. This has actually happened. So I'm not just making it up, but the first one is going to be a spin studio in London. So it's a business synopsis. It's a new spin studio to London. No existing equipment, no current location, no existing customers. So this lady came to the branch. She didn't bring her documents this time. She said, hey, I want to open up a spin studio. And we started the conversation. Basically said, I have $80,000 for startup costs, not herself, of startup costs. And I basically need $60K for equipment and leasehold improvements. So what was the first thing I asked? Anybody have any kind of, what would you say question wise to this? Sitting in my chair.
What are your projected revenue and expenses?
Yeah, that's great.
If they're new to London, did they have another business somewhere else before?
Exactly. So we just touched on two, right? We just touched on the capacity and we just touched on the character and experience. We're missing one more.
Have you done any market research?
That's going, exactly. So that's going back to your kind of business plan. But there's one more C I'm waiting on. One more.
Steve just said, how do you plan to acquire customers?
Yep. And that's going to be, let's group those ones in kind of the character kind of capacity piece, because that's going to go into your business plan, because this is a new business and we really want to see some of that input in there. So all really good points.
What's your credit like?
What's your credit like? That's character. We're building on that.
Steve said it in the chat too. I was going to say collateral as far as, because if they have 80K in startup and they're asking for 60K, do they have 20K of their own? Where's that coming from?
Exactly.
And do they have any other personal property that they're willing to put up to support the loan?
Exactly. So to give you guys some perspective here, what do you think about this deal? Now, I'll give you some, I already told you, 80K start, we got 20K that the owner, says, okay, I can contribute. So 60K in equipment and leasehold improvements. I'll tell you right now, they did previously work in Toronto for a spin studio, helped manage that. They know people in London. They're from London, have a community here. They have done their market research. They've gone to other facilities in London, gyms, to check out other like what the other offerings and competitive disadvantages are. They have a little bit of a savings because they worked in Toronto and lived modestly in Toronto, saving some money and working overtime. One more question. How do you feel about this deal right now?
I have one more question that I'd ask them.
Please.
If they have no current location, where are they planning to put this 60K worth of equipment?
Exactly. So it's quite typical for a deal to land on my desk where someone has got this plan, but we don't know a location yet. And there's two ways this is going to go. And I'll try and speed out so we can get to Nate's example too. But we're rushing to open and get a location, doesn't matter where, or we're going to be patient and find the best location for our customer base, right? So there's two reasons why, we're moving to London, but it's going to take those two opportunities. For this client, trying to find a location in a demographic area that's it's not very serviced right now, but also people are looking to go do, more activities and whatnot. So they are looking, but they don't have a secured location at this time. So I'll move on. So what did we do? So the ending result, we actually did use that CSFBA loan we had. So because the equipment that we were looking to purchase was basically spin bikes, and I think we did leasehold improvements, the owner didn't have enough money to contribute to the whole thing. So right there, our collateral, whenever you say spin bike or equipment, I cut it in half. That's the value that I'll give you. But because we need to make it more cash, we went to the CSFBP program. Sorry if I messed that up. For 80% of the value. So we were able to provide 50. And she actually worked hard to gather another $10,000 from, I think it was just some other jobs and working a little bit longer in Toronto. And then we talk about the personal background. So she had a great experience, right? She had all that time working in Toronto as a manager, seeing and identifying areas that needed to have improvement, writing it down, working it, showing me a huge system, a huge work. Like this lady could walk me through the business plan with her eyes closed, no problem, right? She knew all the financials. She had an accountant help set it up, market analysis, operations. She had a strong support system from her family. You know, she knew all the kind of ways to figure this out. The government guarantee backed the collateral piece. Her financial reporting and business plan and evidence supported all the, you know, all the financial pieces and cash flow. And her ask was realistic. Like, it's not, I'm looking to open a 5,000 square foot spin studio. I need 200 grand, right? Something, this is a small niche. And actually it looks very much like the one at the top here, very niche focused spin studio that London doesn't really have. So that's how we looked at this deal. And that's how we were able to get it approved. She had great CRP and BNI. That's your consumer, blanking on Nate, but that's how CRP is basically how strong you are at repaying your own personal debt. And hers was phenomenal. So we said that mitigates any kind of this risk right now in the future. So we actually did provide the $50,000. Does anyone have a question for this example? Go on, Dave.
I was just going to encourage them to ask, how's the loan going? Is she well into paying it?
I was just about to say, like, okay, so they got the loan. How are they doing now?
Yeah, so got the loan, and what's cool is we found a great location. First of all, found a great location in an area that was accessible. We got it on the southwest side of London, and because it was a small location, and let's be in mind, it was kind of in the beginning of COVID, kind of just started up and built everything, and then COVID hit. Moved to doing some outside things, virtual training, really one-on-one, really great community. She's doing great. Her numbers are up there. She's doing all her sales. She's trying to sell some merch, doing this, going there. Obviously, COVID has impacted it, but she's still able to revolve other sources of revenue from this. And what's also cool, and I'll just let you guys know this, is a small tidbit, I know we've got 9 minutes left. CSFBA program, because it's from the government, has a lot of strength behind it. We are able to go 12 months interest only at the beginning, so she can cycle her business up without making huge lump sum payments. In addition, if you have issues, you can actually go on to the system where you only have to make one principal payment per year to maintain the loan. So with that system and COVID, we were actually able to keep moving forward. Yes, we paid 2% off the bat, but it secured this loan, and she's been great. I would say the best part of this relationship here is the actual communication between me and this owner, and she's doing just great.
That's awesome to hear, Tom.
Yeah.
It's really cool to see this insider's perspective of like what led to her actually getting the approval. Because honestly, on the last page, I was like, I don't know if I would do it.
Exactly, right? Exactly. And you know what? If those circumstances were different and she didn't have experience, she didn't pay her phone bill, like these are small indicators, right? That massive up to risk mitigating qualities of a character.
It's awesome. Thank you for sharing this with us.
We have one more if we have time for it. Sorry, I only left you 8 minutes there, Nate.
That's okay, Tom. Try and run through it quick. I was going to mention, actually, when Tom transitioned into the analyst role, I actually took over this owner's portfolio, and they are doing well. And interestingly enough, when I was speaking to them the other day, they've pivoted really well, very agile business. They're looking at expanding into another, I guess, division or aspect of the fitness industry, but something that might correlate a bit better during COVID-19, or, you know, where physical distancing measures are required. But I'll try and get this example in 7 minutes. But yeah, here we go. So example 2 is an existing business, so a little different than Tom's example, but I thought it was a good one because there was 2 products they were looking for. They asked for something that was a bit different than what we ended up doing, but I'll just start with the synopsis. So it's an existing HVAC business, 10 plus years in operations in London Middlesex region. They were now at the time under relatively new ownership, and they were looking to grow the business by expanding the fleet of vehicles that they had. So the initial ask, I actually had to adjust. They had asked just for a $200,000 line of credit. And when I asked why, they just said, I heard line of credits are good and we need a big one. So line of credits can be great, right? But from our perspective, we want to understand what it's going to be used for. And once I dug into that, they actually wanted to acquire a vehicle. and some additional tools to expand the fleet. So for us, we'd rather have, a finite payment date in place and have blended payments. Something like this can sometimes end up being, a pay you never plan if we just give you a $200,000 line of credit interest only. So that not only handcuffs your business, but it kind of leaves us in a position where we want to get paid back at some point. So the ask was changed to a vehicle purchase plus a $50,000 operating line. The operating line is just sort of for some cash flow flexibility. But yeah, I'll open it up to you guys. If there's any questions you'd want to know, what would you ask this owner?
Past history of the company.
Yep, that's a good one. So that ties in with capacity.
Who will be driving the vehicles and what their driving record is like?
Yep. So again, that probably ties into character pretty well, right? The management experience of the owners.
And also for insurance purposes, because if you're buying vehicles, you have to be able to insure them as well.
Yeah, there's a great question in the chat too. This is one of my first questions. Who's the new owner and what's their experience? This question was accompanied by, why is there a new owner, right? If we have a really successful business, why did the people want to sell it? And that's not to say there's not a legitimate reason, right? People retire or they want to explore other things, but those are all great questions, right? Why, what was the previous performance like? What assets are there in the business now? What did the purchase entail? So it looks like we have character covered, projections covers capacity as well. And then the last thing's collateral. So in this case, any ideas of what we'd be looking to use?
The location, the vehicles that they already have, and tools and equipment.
Yeah. So what we ended up doing, if you just want to flip to the next slide, Tom.
I gotcha. There we go.
So what we ended up doing is, because the 3 C's lined up well, kind of as we discussed, we asked questions about their character, previous historical results, personal net worth. We ended up doing 75% of the term loan request over 5 years on the vehicle. So for the vehicle, I'm not sure who made the comment or was in the chat there, but we financed it secured on the vehicle. So we used a PPSA, which is a specific security agreement on the vehicle that puts a lien in Libro's interest. And then we also used what's called a general security agreement. So that gives Libro first right to, in the event of any sort of delinquency, to the tools, equipment, accounts receivable. So why we did it, they had good results. The owner who purchased the business had actually worked for the business for the previous 10 years, and the existing owner was retiring. So pretty strong character there, business acumen and understanding of the operations. Himself, he had pretty good personal net worth as well. He was willing to put some money in, as we only financed 75%. So 25% of the money down came from himself. And we had good security here via the specific security agreement and the general security agreement. So that's sort of the why behind how something like this happens. Is there any other questions that you think you guys would have about this? Anything specific to the process?
Any questions, guys?
Yeah, not everybody all at once.
I know. This is the end of our final day for the week, so I think everyone's feeling
There
it.
you go.
So I have a question. I don't know if it makes sense, but in my head, I'm trying to figure out how to word it. But so they got the term loan request for a 5-year term and then a line of credit. So they would just make those separate payments. It wasn't like a combined, it was 2 completely separate items, correct?
Yeah, good question. So the term loan on the vehicle wouldn't be any different than having a personal vehicle, except it's held under the business, where you'd have, on a certain frequency, a completely separate payment. The line of credit, you won't have to make payments at all on it technically if it's not being utilized, right? So the reason they wanted the line of credit is this business was growing really quickly, and the industry that they're in had 30 to 60 day accounts receivable. So when they were trying to collect on work that they had done, they had to be buying materials, paying wages. So there was sort of a gap between when they had money coming in and out. So the line of credit just sort of fluctuated between the times that they had money coming in and out. And that was just attached directly to their business checking account. So great
Okay.
question.
That's perfect. Thank you.
My question was going to be, from the two examples I've seen, I'm going to take a guess and assume that they were sole proprietorships. How would your financing be different if it was an incorporated company?
So my example, actually, she did incorporate
Okay.
into her the business. So we really look at that, like, at the end of the day, it's, there's pros and cons to what you want to do in terms of tax perspective or a liability perspective. But when it hits our desk at the end of the day, for us, it's relatively the same. We look at that character piece. If it's a corporation, some people think that, we only look at the corporation. No, I need all the shareholders' information just the same as a sole proprietorship. So I need all of that information. So it's very similar on this kind of level.
That's good to know. I didn't know you would necessarily need all the shareholders' background information. Or I figured it would maybe be like maybe the majority shareholder, but it's good to know that you would need all of them.
Yeah, so it's up to I believe I think it's 25. Is it 25%? Yeah, if you own 25% or more in the company, we need all your information. So that's your 2 years past tax returns, notice of assessments, and we need you to fill out that personal net worth statement. And I pull your credit.
Okay.
One thing to touch on, I think that's a really important thing to know is, we do look generally at the ability to borrow the same, but something that's really important is if you're going to borrow as a sole proprietorship, not that there's anything wrong with that, but that can impact your ability to borrow personally, because all of the credit facilities that you're applied or approved for are going to show up on your personal credit report, right? So if you have a lot of outstanding business loans, etc., and you walk in and go to get a personal mortgage to buy your first home, they're going to be using the repayment of those business loans in their calculations for your capacity. So it's something to keep in mind. You will have some separation if you do have the corporation, but it's not always necessary. It really depends on what you're trying to achieve.
Great question, though.
Any other questions, guys? Before we wrap up?
I kind of have a quick question, and it has to do with like credit score and whatnot. Like, we're currently like building up our credit score to be a higher number. We had a blip in the credit situation about 8 years ago, and I'm just wondering how that would impact, as long as we have sufficient, I guess, explanation to what happened, or how would that go?
I can take that one. So yeah, typically when we go back to the 3 C's, right? Character is a very important part of that equation. But number one, again, is communication and transparency with your lender. If it's something that you've worked to improve and there's been some demonstrated improvement, then it's not going to be as great of a hindrance as, if I looked at somebody's credit report and saw in 2010 that they missed a bunch of payments on their cell phone bill, but they haven't for the past 3 years, that could be immaterial in some ways, depending on what payments were missed. So it can have an impact, but I think being transparent about the reasoning behind it and what your plan moving forwards is equally important.
Yeah, and just to back up what Nate's saying there, the clarity is very important, right? I've had an owner who's had a Rogers box go to collections, but it's because he's battling Rogers, and he said he returned it, but then didn't. And these are typical things, but the clarity, right? The story behind it, the proof, the evidence, that's all important. And show, like, honestly, build the relationship. That's the most important piece here with your lender.
Thank you.
I think that's a good place to call it here, guys. I think ending it on relationship building is key. And I know there's, I know Steve starting his business, a lot more capital tied up in creating a retail space like you're building, Steve, versus something like Evity's doing, or any of you else here. It's a lot more money. So you might not be thinking in terms of like, oh, I don't need money right now, but that doesn't mean you don't need to start building relationships right now. because that's really what, could end up making or breaking, based on what we've learned here today, whether or not you're able to get to work with a lender. So Thomas, Nate, I thank you both for sharing all this very key information with us today, and give us some insight into what happens as from the lender's perspective at Libro Credit Union. I definitely recommend, guys, if you're shopping and looking for a credit union or a bank, it's a great place. Libro has supported so many of our Leap entrepreneurs in the past. I know a couple of them actually been on some billboards around town, which is just pretty cool. So gentlemen, thank you again for joining us. And I hope we can do this again in the future, maybe in person next time.
Exactly. Always a thrill to be here. Thank you so much, everybody.
Much appreciated. Thanks for the time.
It was very nice to meet you, Nate, as well.
You too. Take care.
Have a great rest of your week, gentlemen.
Okay. Bye.
Take care. All right. Before we completely leave for the day, Ashley has an announcement that she wants to make to the group. So Ashley, I'll give you the floor.
Thank you. So I talked to Dave and Kelsey about baking for everyone, and it's kind of been an idea that I've had. I've wanted to do this throughout the whole program, but just life has been very busy. So I think I've scheduled out enough that not next week, but the following Monday, I'm going to go into my commercial kitchen and I'm going to kind of make like little sampler packs, I guess, for everybody, for either pickup or delivery. So we kind of have some treats to enjoy our final week of Leap. Unfortunately, Brooke, I know you're not anywhere near London right now, so I'm really sorry, and we'll try not to brag too much. But I do need everyone's address if you would like delivery. I know some people kind of live on like the outskirts of town, and that's okay because Dave has graciously offered to help me deliver, so I'm not driving all over the place. So I'm just gonna type my email address in the chat here, and if everyone can email me wilco.com, sorry, as soon as possible with your address, that would be awesome. And then Dave and I can kind of coordinate delivery. We're probably thinking either Monday, July 19th at night, or like Tuesday the 20th in the morning. Yeah, so everything's vegan, so no dairy, no animal products, gluten-free. Everything basically has nuts. So if you have a nut allergy, I'm so sorry, but there's absolutely no way around that. So if you do have a nut allergy, then yes, I apologize. But yeah, I'm excited for you guys to try out my treats, and I've been taking July off from baking, so nobody has been eating them. And so I need to bake.
Thank you, Ashley.
You're welcome.
Thank you so much, Ashley. We really appreciate it. And
yeah, of course.
If you guys aren't comfortable with me knowing where you live, it's okay. Just give me like the closest mailbox I can drop it off to. I'll leave it on a porch somewhere. Awesome. Who's all missing here? Just so we know.
I think just Evity.
So
she's in here. Josh left.
Josh and Evity are the only two missing. So
I'm supposed to be connecting with Evity later today.
Okay.
So I can tell her to send the email to you, Ashley.
Amazing. Thank you. And then just Kelsey and Jenny as well, I guess.
They already know about it.
Right.
For me, but I will. Kelsey lives in Woodstock, so we'll see how that ends up working out, because I don't know if I'm gonna drive all the way there for that one. But maybe she'll come in. Who knows? Maybe
we might need to be going to Toronto soon, so we might be driving by there. So
yeah,
we might be able to figure that out depending on things.
Awesome.
Perfect.
Actually, I probably owe Kelsey a visit. This time last year, she came to me, so maybe I'll surprise her and go to her. Awesome. Well, thank you so much, Ashley. That's super generous of you and very kind. Yeah. I can't wait to eat these infamous treats that you bragged about so much. So Awesome. Well, guys, this is the end of another week. I hope it wasn't too boring, but I hope you learned something. If anyone wants to stick around, I have time. If not, I hope you enjoy your weekend. I hope it doesn't rain on you. It looks like it's stopped raining now, which is super nice here. And if you want to make a meeting to talk about numbers and your template, please book some time with Kelsey, Jenny, or I over the next week. I'm happy to go through that stuff with you. Yeah, so great week, everybody. Great participation, and good luck with your video preparation and your business plan presentation preparation and all that jazz. And farewell. Have a great weekend.